Hi everyone, Pedmai here. So today I'm here with Michela and Razurn. I hope you've been enjoying the Congress so far. In the next segment, we'll be talking about crypto and Forex and trading and investing. That is a space that Michela has been involved with more recently in crypto markets. So let's get started. I'm going to add them to the stream now. Hi Michela, can you hear me?
I can hear you.
Yeah, Razurn also? Yeah.
Yeah, hello, man.
Perfect. Michelle, uh, first of all, could I ask you to introduce yourself, please, to the audience and give us a bit of perspective of what you do in the markets, what has been your trajectory so far, so that people can be more familiarized with who you are, please.
Absolutely, absolutely. Thank you for the invite. My name is Michaela. I currently lead institutional relations for Huobi Global. So I lead the business development unit of all the institutional clients that Huobi Global has. My focus is 100% institutional trading. Before that, I was in FX. So I do let's say I do have a background between FX and crypto. Very excited to be here, as I think I could be giving a more institutional approach to trading and what institutions are doing at the moment, and what are the forecasts by institutions itself for the next months.
Awesome. That's perfect. That's a completely different subject than we have been talking so far. So that's a nice twist to the Congress. In terms of your journey, so from what I understand, you started in the Forex market, in the currencies markets. And how long did you start? How long ago did you start? And how long did you take to approach something similar to being a professional trader or investor?
Of course. I started FX when I was in university, in my third years of university in economics. So if I have to go way back, it's more than five and a half years ago. When I started, I was purely technical. Then I gained knowledge of fundamental analysis, and I in fact transitioned from technical analysis to fundamental. I became quite good in fundamental. In fact, in which I would say all my reach for my entries will be purely fundamental. The exact entry will be using technicals, but thanks to my knowledge in economics, I think that thanks to my experience as well in FX, I think that I gained quite a good transition to FX. I would say, sorry, to crypto. I would say. How did I start in FX? Well, I started trading less volatile pairs, Euro Swift. Everything that it was not as volatile, of course, not GBUSD. Euro USD was, of course, in my portfolio. USD Swift. So as I said, those type of currencies were the ones that I traded the most, and I kept this risk management in a very conservative manner, a uniformly manner in crypto as well. So this is the same risk management that I apply in crypto, of course, with some variations, but in the same magnitude, I will say. The reason why I transitioned from FX to crypto, it was for two reasons. One, because I realized that the FX market, I didn't want to be in the retail FX market anymore. I thought it was oversaturated. And I said, let's dip into something different. And when I joined the crypto markets, of course, the gains were different. The losses, bigger, of course, but the gains were substantially better. And with new research, the probability to increase capital were much larger. I went from, very important, I went from a FX firm to institutional crypto, and that gave me a different approach in the markets, because it's different to work with prop firms and retail trading in FX than working totally for institutions. They do have a different approach. So I appreciate that transition, and now purely institutional is making me seeing things a little bit different, which of course we're going to discuss here in this webinar.
That's perfect. That's a bit of that's very similar to my journey so far as well, because I've started like 5 years ago, late 2017, in the equity side, not forex, equities, and I later on switched to the crypto market, seeing that there were more opportunities, that there was a less explored market. So I am a quantitative trader, and I build models based on quantitative analysis and modeling, and what I've seen from is that on those legacy markets, the edges are way more exploited, so you need to be way more creative. When you switch to crypto markets, it's a very different market. I like to call it like the wild west almost, even though regulation is coming eventually, but there's a lot more opportunities that to exploit.
Indeed.
uh, I found it very interesting that you said that you use fundamental analysis to get an entry point, or used to use fundamental analysis to get an entry point on point on the market, and use technicals to get an exit. What if, of course, we don't have to go into details. That's not what I'm asking. But
Of course.
what type of fundamental triggers were you looking for to give you an entry, and how did you determine that that fundamental trigger was like a long position, a long biased position, or a short biased position?
Of course, of course. A quick note here. Of course, there is an element of technicality, of course, on entries as well, because I do need to make some measurements from the very top to see whether the risk reward in any project is good, right? So if even in the entry there is a risk of technical analysis, a bit of this. I think the reason why I start to do fundamental analysis, and more importantly here when we're in a bear market, is because you want to make sure that you know exactly in which projects you're investing. For instance, and again, my fundamental analysis goes far beyond than just a typical Google research, a fundamental typical Google research. I'm for instance trying to research whether I'm gonna put a name, whether I should invest in Solana. I do not only see the usual checkpoints, which is let's research the team, let's research the developments, let's research how many wallets, research how many people are building in Solana. No, I go deeper. For instance, I went to Solana Breakpoint a few weeks ago in Lisbon, just because you need to see the quality of the team. It's just not who is the team. Let's see the quality of the team. Let's see how they work together. Let's meet the CEO. Let's see how they forecast certain developments in the roadmap. Is going deeper, is knowing well who are the people leading those projects, because tokens are centralized. I mean, they do have identity behind, right? Except for Bitcoin and a few other tokens, but the majority of them, they do have a team behind, and the team, and we have confirmed this year, such as Luna, that the team does have an impact in the success or fail of your investment, right? And let's say FTX, right? So at the end of the day, your fundamental analysis needs to go way back than just knowing the basics. Again, as I said, it's just not only knowing some on-chain, good on-chain that data of that token, but also go ahead and do the research. If you're putting more than 20k, 30k, 50k in one project, why can you not invest £1,000? Say £1,000, I'm based in London, but why can you not invest $1,000 to go and meet the team in one of the conferences and shake the hands of the main developers of that chain and see the quality of the people behind the project? That's what I mean by fundamental analysis. Then on technicals, of course, for me it's basic in this bear market to see which is the project that has the best risk against reward. I mean, if we know that the majority of them are reaching the bottom, which are the ones that are reaching the bottom, the biggest bottom or deepest bottom, I would say. I think that this is what I mean by analyzing chain on-chain analytics as well. Is and more importantly, analyze like institutional approaches. Here I cannot instate the most the importance of, for instance, Messari. Messari gathers very well the analysis of institutional investors. So what are institutions doing at the moment? Are they allocating capital? Are they not allocating capital? When on-chain analysis are giving the green light, or when the on-chain analysis are telling you that institutional investors are back, then that's the moment in which I start investing as well, personally and individually, of course. It's all about when the big guys are allocating, because then we know that's the trigger. Then we know that's when the status quo changes. I don't know if you have any questions so far. I will let you fully continue.
No, I have a few comments. That's a very interesting perspective, because there's a big debate on this space, on our trading space, investing space, that people say, only technicals work or only fundamentals work. Why not mix both of them?
Well done.
take technicals from a for a risk metric perspective and confirming your fundamental bias and getting a fundamental bias to understand if the team has the capacity to go somewhere. Because if you are playing, I would say, gambling with $1,000, $5,000, that's different from an institution that is playing with several hundred thousands, maybe millions of dollars, and wants to put in a safe, not safe, nothing is safe, but on a more consistent project. And analyzing the team makes total sense. That's a
Indeed.
very interesting perspective. You are going to.
Indeed. Analyzing, more importantly, analyzing the team and analyzing the developers of the team and analyzing the developers building in the chain, which are the developers of the protocols that somehow are developing the DApps in the chain, because they can give you other perspective when you speak with the developers. And that's something that you can do without traveling to the conference. That's something that you can do in GitHub, and that's as well part of fundamental analysis. If you go to GitHub and you start connecting, or even LinkedIn, connecting with different developers that are building their DApps in Solana, again, I'm just putting a name as an example, then you can even discuss with them, look, what is the pros and cons of working, of building in Solana? Do you like something in a specific, what you don't like? What do you see that are the flaws? Do you see any red lights? And the developers that are building in Solana but are not part of the Solana team officially, they will give you a lot of very good information. So yeah, it's not impossible to get that answer. It's just getting to the right places, as GitHub and LinkedIn.
Awesome, and that also gives you probably gives you a better edge, because that type of information is not available to everyone, like price data. If people rely only on price data, they are relying on a type of data that is available to everyone. And with the advance of technology today, machine learning, you can pretty much discover any system that you want if you have a strong enough computer. So bringing that derivative data, like you were saying, go to the team, go to GitHub, talk directly with the people building in the project, might add a different bias to a project that we didn't have before. For example, Luna, if people were only relying on fundamental analysis, lack of fundamental analysis, they would have be holding a bug right now. So mixing all those parameters to create a viable model is, for me, the goal, the key to a profitable trading system.
Yeah. And
Awesome.
I think that all the black swans that we're living this year, but what I mean by black swan are Luna and FTX. I totally consider them black swans, as they were not expected. I think those two cases are teaching us where are the flaws in fundamental analysis. Because in Luna, for example, no one, I was a victim of Luna as well, I need to say it. I would never have predicted that stable coins had that flaw. But again, I always put the flaw, the I would say the guilt on me, in the sense of I should have researched papers on what's the flaws as well of stable coins that we're relying on automated liquidity pools. Again, it was more flawed, but the information was there. When I searched after the attack, I saw that the information was there. The information was in Google. I was not making the right questions, and that's part of fundamental analysis.
That's very interesting. Yeah, that's a very interesting perspective, adding that side also. Okay, so we've touched here brief on the way that. So I was going to ask you now, from an institutional perspective, that you were saying what you are allowed to share. Of course, how do you approach markets? Is this the way that you are doing it right now? So researching the team, like we were saying, I think that is what you're saying, and then from a technical perspective, try to quantify the trade, how much to invest, how much, where to exit, all the rest.
Yes, yes. As you said, everything that you name is exactly what we do. But I think that if there are other elements that are also part of being an institution and trading as an institution, will be, we also rely on sentiment analysis. And what I mean by that is, because it's not a small network, but it's a close network, in the sense that we all know each other. We all know. I mean, we know people that work in Binance. We know people that work in Coinbase. We know people that work in all the major hedge funds around the world, family offices, not only hedge fund family offices, high frequency trading firms, market making companies, etc. And the good thing about this is, you always need to be asking, what is your perspective on the matter? Are you allocating? That question is key. Are you allocating? And if they say no, then you know that wait a second, if those guys are not allocating, there must be a why. You're entitled to ask for a why. Not everyone will say it, but the majority of people will be transparent about allocation, right? In fact, the majority of people will either publish their reports. I mean, if they're a very transparent fund, they will say when are they allocating, and when they tell you that they're not allocating, why a retail trader will go against the best ones and the best trading firms in the world? You know what I mean? And that's why sometimes when I meet with a trading with a retail trader, when I meet with an institution, and I ask, okay, the retail trader is in favor of market going bullish, can you tell me why? They rely only on technical indicators. Well, the volume is up today. Wait a second, go to the institutional trader and ask them why are they not allocating. And the reason why they are not allocating is because they do have their quant team behind analyzing metrics that the retail trader is not seeing. I'm not saying that the retail trader cannot have a hedge in the market. I'm not saying that. What I'm saying is a retail trader should always use the sentiments of institutional trading to enter the market. They cannot overlook it. They cannot omit this information. And where can they find an information? Again, Messari is very good for that. I mean, subscribe to Messari, subscribe to newspapers like Kaiko. Kaiko Research is really good. Messari is really good. If you are paying $9, $10 for Netflix, why wouldn't you pay $12 to subscribe to institutional trading newspapers that will give you a good hedge on your trading, right? And those guys in Messari, those guys in Keiko Research, they are back to back making those surveys to institutional clients about what's their perspective on the matter, what's the institutional, I mean, what is the sentiment? And a big role of what I'm having at the moment in my current role, I do need to knock the door of the people that trading Huobi, for example, and ask, are you allocating at the moment? Are you investing in the markets? Of course, I'm not able to disclose whether which ones are and which ones are not, but it's very very important that you not only ask are you allocating, but also why are you not allocating. Is building trust with us client, right? And it's understanding what they're doing and what they're doing. Tell me, why are you're not allocating? Is there anything that from an exchange side we can do to help you in certain ways, or in certain times the exchange can help because we do have a set of tools or a set of options that somehow make those trading entities or those trading firms trade. But there's also factors that we cannot manage. For instance, afraid of being in the market, afraid of uncertainty after FTX. I'm sorry, but it will take time for institutional investors to regain trust in institutions that manage or lead the board, right? So I think that at the end of the day, yeah, I mean, it's that part that exchanges can also not manage, which is why are you not investing? Sometimes it's not because of the exchange. Sometimes it's because of the market, and they are the only ones that will have the green button and say, okay, we know we'll be back at allocating. But those are the guys deciding when they will be allocating or not. And trust me, they do keep in contact with themselves. What I mean by that is market makers do keep in contact with the biggest market makers in the world. The biggest family offices do keep in close contact, and they do make coordinated decisions on whether, okay, let's all sit down and say, is this the right moment? Is this the right time? This doesn't look right here. And of course, after FTX, the market has panicked so much that the majority of them has said, let's wait until like situation gets clarity. I think that from the institutions that are doing it well. They're trying to change this. Like for example, Huobi, we're trying to again knock the door of investors and just listening to them. Is so important to listening to them. What do you need? What do you need to trade again? What do you need to to gain that trust back? What products or services they need, because now they need extra products or services. So anyways, just wanted to give that review on what it comprises to I mean what retail traders should see when they are taking into account what institutions are doing. That's my take on this.
No, that's a perfect take. If you take the statistics that 97%, around 97% of retail traders eventually lose money, are consistently losing money, why are you relying on them to make your trading decisions? Doesn't make any sense. And also looking at volume. If you are looking at volume in the crypto market, you better be looking at all exchanges volume, because volume is decentralized. You are not looking at a centralized exchange like you are looking in equities or in Forex, that data is centralized. You are looking at decentralized data. So you need to factor in all the data together. exchanges with less volume will have different spikes that seem that something important is happening, but nothing is happening. It's just a spike at that exchange. So there's a lot of factors here that you pointed out very well, and that people should take into consideration. Also,
Mm.
you touched a little bit on sentiment analysis, which is a very interesting topic. There's a lot of machine learning quants trying to quantify that. From myself, from my own personal trading, what I do is I look at what I call a regime targeting. So I want to be uh, as best as possible without falling into issues like overfitting the data to the data that we have, doing all the robustness analysis. I want to know in which regime we are on and only apply my systems that work on that regime. So if you are in a bearish regime, let's make it simple. I don't want to be trading a long only strategy. I want to be maybe shorting or be in cash. If you are trading a bullish regime, you want to be applying long only positions and maybe pressing size. So getting that defining those regimes are very important for me, and maybe with a bit of sentiment analysis that edge can be improved way a lot. I know that for myself regime targeting can improve your edge way more. You can't be trading what you've been trading in a bull market in a bear market and the vice versa. You need to be specific. What is your view on that, if you don't mind?
Sure, for sure. Here, I will disconnect myself from my company because, of course, I do not represent the data team of my company, and I don't have the data at the moment for this. I think on a personal matter and individual matter, I am very market neutral at the moment. What I mean by that, I mean trying to hold on my reserves as much as I can until I have clarity on where when price action is going next. I mean, you see the BTC chart, which is what everyone takes into account as an index for where the rest of the market is doing. Of course, we can see that the monthly candle seems to be closing under a key support, and until the candle closes at the end of this month, then I won't be going short. I will only be going short when this monthly candle closes below this support, because of course I'm expecting to go lower if so. Okay, because one of the biggest mistakes that retail traders commit is always forecast how the monthly candle will close even when it hasn't closed yet. So back to my point, I think that in terms of, and if that's a question, if I'm answering correctly, please do tell me. My strategy at the moment is, I wouldn't say cash because I still have it. I'm still fully crypto and still hold stable coins, but the majority of the proportion of my portfolio that is not invested in coins is back to USDC. I mean, it's back to stable coins because I'm very market neutral at the moment until the market doesn't get clarity.
Yeah, makes total sense. I am the same here. I have a few short-term systems running at the moment. I have one short-term system running at the moment, but it's not the majority of my portfolio. The majority of my portfolio is cash right now. And has been since November, late November, early December, with a few opportunities in the middle, but there's nothing big like we had last year.
Yeah,
So
and I'm sorry
yeah,
that I interrupt.
no
It's
problem,
now
please.
more important than ever to study well the similarities or study well history, because people that has not studied the 2008 financial contagion, they should do it now, because there is, I mean, that financial contagion that came after FTX went bankrupt, that financial contagion could last a few months. And I mean, the bankruptcy was just filed a few weeks ago, right? We're not far away from it. And some people just say, yes, we're out of this. We are already bullish. No, when I go back and see the financial contagion of 2008, it lasted months. So be careful, like do proper research on the matter. There are many agents that were affected. Of course, the ones are solid now. Exchanges are very solid at the moment. I mean, the ones remained, right? We have, of course, put out our proof of reserves and everything is very solid for us, but that doesn't mean that our other agents will be as stable. We saw it with Genesis, we saw it with BlockFi. And again, keep doing research, which were the counterparties affected by this contagion, and that this could affect the market. Do not be fooled by, okay, the contagion has already stopped. No, it could last months. Okay, and also very important, I think that that's something that I'm going to put effort on next year, sorry. I do not have time to do that piece of research at the moment, but next year, one thing I will add in my strategy is the deep study of black ones. What I mean by that is how my strategy as a trader in the crypto market can take in a more appropriate and accurate manner take into account black swans, because we saw a black swan with a token, we saw it with Luna, we saw a black swan with an exchange, we saw it with FTX. But who says, and we saw it with Celsius, which was a low B2B company, but who says that we will not have a case like this in DeFi? So we need to take into account, because many people are now allocating to DeFi, but the moment has arrived yet. The market is such in its infancy that you haven't seen a black swan in DeFi yet. But careful, do not make the mistake of assuming it will not. So one thing I'll do next year, I need to sit down and properly make a studies on this, is how can I predict black swans? How can my strategy in the markets can be bulletproof by those black swans that can affect any agent in the whole crypto ecosystem?
Exactly. It's that old saying that we have in this space, is that the markets can stay the markets can stay irrational longer than we can stay solvent, right? Anything can happen. You have to I talk about this a lot in my Twitter, is that everything is in the realm of possibilities. Plan for the worst. Even if you have a sizable account, and even if you're not, if you have everything on one exchange, like you've seen this year, like on FTX, you are exposing yourself to risks that are outside of your trading. You might think, I'm a really good risk manager, but you have to think of risks outside of your trading from a portfolio perspective. Try different exchanges, allocate money in different sites. I know that it adds burdens to your trading because you have to put orders everywhere, but that will add you a kind of diversification that you didn't have before, and you might have avoided the FTX situation, or at least be less affected by it.
Indeed.
Yeah. And so my next question is about long-term investing and trading versus more of a short-term base. When I say short-term, I'm not saying day trading, I'm saying swing trading, holding for several days, more medium-term. There's a lot of people in this space that try to trade and day trade and make very short-term bets on the market, and for me that's very hard to do consistently and over long periods of time. There's some superstar traders that can do it, and they've done it with strong track records that are audited and third-party verified, but that's not many. The reality is that 97% of traders fail. So I would like to ask you, what is your perspective on allocation between long-term holding? I'm not saying just buy and hold also, but I'm saying long-term holding and having more a short to medium-term trading perspective. How much people should think about each topic?
I think the answer is to that is you need to evaluate your resources and your tools, because it's all a matter of, again, competing with the big guys. You know that there is something called market making in crypto, and the biggest market makers in the crypto world or in the crypto ecosystem are the kings of liquidity, right? They're the ones managing the system in terms of liquidity. Who will go up today? Who will go down today? Or why? Let's say. If you're a short-term trader in the quants and a retail trader, you need to ask yourself, am I going to be more profitable? Am I going to have a better edge than market makers? And the answer is probably, if you don't know how to code, and probably if you don't do automated trading, the answer is that no, you're not. I mean, that's probably the answer. I try to put myself in a very pragmatic positions all the time. Again, take my word as Michaela and not as Huobi, because here I'm separating both, like being both entities, right? Well, here myself individually, what I do is I just ask myself that question: am I competitive against market makers who are managing who are dominating the liquidity, all the liquidity in the system? And I know that the answer is no. At least for me, the answer is no. If I don't have a very profitable algorithmic trading system, then of course I know that I cannot compete on the short-term basis. What I do is I try to stay in the short. Let's say my short term is always 1 week, 2 weeks entry, max 3 weeks entry. That's my short term. My long term, of course, is going to be put a certain amount of capital that is always above 10K, 20K, and put that certain amount of capital into the markets until 6 months from now, 7 months from now, and then DCA from that. That's the most easiest strategy that I apply. Again, there are many strategies that are applied. DCA is just only one, and it's the one that I'm applying slowly in bear market. Back to my point is, I think that people need to consider very well what's their edge in the crypto market, and if they think that by being a retail trader and putting positions every 5 minutes in a manual way, that's strategic for them, they need to rethink that. They need to rethink it very well, because again, if they study market making fully, that I do know by a fact that 95% of the people there do not understand the science behind market making and what are the mechanisms used by a market maker. Otherwise, their position, I mean, not the position, their mindset will be changing. And once they understand what a market maker does and the strategies of market maker and why they do win on the short term, then of course they will move into a 2 weeks time, 3 weeks time short-term position, what I call. That's the most pragmatic thing to do. Again, don't take my advice for word. I think that that's what has worked for me. This makes total sense if another formula has worked for, I mean, if there's someone watching me today and hearing me today and they have experience very short-term trading in a very profitable manner, congratulations, you have done it. I'm just saying be careful, because there are market makers out there that have all the tools to outgrow you, and that's my beat on your question.
Yep.
So, yeah, we have a question here. Double R asks, do you know roughly the ratio or how much overall market liquidity is from institution versus retail liquidity right now compared to a couple of years ago? And he asked, is there a way to check this?
Yes, there is, and I mean, I don't know. Let me reply to the first question. I don't know the specific ratio, but I do know the reason why it is right now is majorly institutional and retail. 3 years ago, 4 years ago, when there was still no institutional adoption of crypto, that ratio was 90% retail, 10% institutional. Right now, it's almost 60-40. Okay, and it's growing. The more they regulated the market, the more that ratio will go um, in advantage of institutions. To the person that has just made that question, is very easy to find out this when you go to the quarter reports, institutional trading quarter reports. That's the word you need to search on CoinDesk, Cointelegraph, Messari, Keiko. You can see those metrics by simply using a proxy of what's the institutional adoption at the moment. If you see that the institutional adoption has grown 30% this year, and I'm just making up a number, but if you see that institutional adoption is X amount, more than 10% a year, of course you know that amount, that capital, that 10% is going to be 10x more than what retail traders are allocating this year. You know what I mean? 10% of institutions it could be probably 12 billion, 13 billion, if not more, compared with how much? 12 million that will be put by retail. I'm just making up numbers, but you can see the proportion. You need to use the proxies. One thing that I encourage people to do is you will never find a report that will tell you, or you might find it, but I mean, be more open-minded to those ratios. When you search those, when you want an answer to those questions, look for proxies. What I mean by proxies is like look for synonyms of the questions that you want. Not all the reports will tell you this is the ratio of retail versus institutions, but they will tell you proxies. Like for example, how much institutional adoption has increased in 2022, how much institutional adoption is expected to increase in 2023, how many TradFi firms, TradFi is traditional financial institutions have been investing in crypto this year, how much they expect to invest next year. So you compare the two. You compare how much retail investor. I mean, what's the proportion of retail investors against this amount? So always look for proxies, because in a report you will never find the answer to your specific question. You need to read between the lines. The information is there. You just need to read between the lines, and that's my recommendation for the person that did that question.
Hmm. And how do you think these institutional adoption affects the market? Because at the end of the day, when we're talking about crypto, we're talking about a decentralized, I mean, financial freedom and everything. And how do you think about that? The I mean, institutional adoption in this space of crypto. I mean.
Is your question if is the crypto market decentralized or centralized?
No, I think you're saying that the institutional adoption is like is there, right, in crypto market, and it's growing so fast. You said like it's 40 to 60 the institutional ratio versus the retail ratio, right?
Yeah.
How do you think it affects the crypto market?
I mean, it affects it positively because it bringing more liquidity to the system and more regulation, which ultimately will avoid or will protect customers against the black swans that we lived this year. I mean, I know that many people don't like regulations. I do know that, and they do not like regulations in the crypto market. But regulations are there to protect the customer. I mean, that it is what it is, right? Otherwise, I mean, you don't see those type of cases in the securities market. Back to your question, I think, how do I see this institutional adoption affecting crypto? I think that there's gonna be. I do think that in a few months, people will start wondering whether the whole I mean, the centralization, it needs to, the centralization must be about tech instead of domination. What I mean by that is, like, the tech will be a lot more decentralized. What is not, what I think is not going to be this decentralized is like a strategy again. The main players gaining in the system or winning in the system. I think that we are gonna see a few similarities to the TradFi world there, because the more traditional firms or the more TradFi firms or the more institutions being added to the game, the more I would say you will have that element of traditional finance into crypto, and is they're the same agents buying and selling, or they were buying and selling traditional assets. Now they are buying and selling crypto, and they are going to bring their game to here. So I don't think that the crypto market will be the same anymore, and I don't think the crypto market will be the same as 3 years 4 years ago. Absolutely not. I think that there's going to be a decentralization of the tech, which is wonderful. Even here, I'm in London at the moment, and I can see the big banks adopting crypto massively and adopting crypto technology massively. Many of them are partnering with Ripple as well, which is one of the main projects I look up to. But back to my point is there's going to be a and a positive decentralization in terms of tech and the using of the usage of this tech. But in the market, I do think we're going to see, how do I explain it, a correlation between many of the market symmetries or many of the market situations that we see in TradFi. We're going to see it in crypto, because again, they're going to bring their game to crypto. Is this positive or negative? I will leave it to the audience, because I have so many debates on this that I'm not one to say whether this is positive or negative. But I think the audience can make an honest reply on whether it's positive to have institutions in the crypto game or whether it's negative. Again, for a retail, it might be negative. If you meet an institution, you'll say it's totally fair. Now we're in the game. It's going to be one word against another word. I think as long as institutions are playing fairly and in a clean manner, and as long as they're doing less harm than good, okay, I think it's positive. Again, unfortunately, we are this. I mean, the last institution that hit the crypto market, that I'm not gonna say names. I think everyone knows the name, but that institution hit the market in a very harmful way, in a very hard way, and we need less of that. We need more institutions doing good. We need more institutions setting the standard, playing fairly, playing transparently.
Yeah, That is a great answer, and I believe that a lot of those customers that were in those exchanges that this year failed and those black swan events, they would be glad that we had more regulation right now. Regulation, of course, can't be too extensive to the technology, can't destroy the technology. Of course, it needs to be regulation more in the type of customer protection and not too intrusive, in my view. But any type of regulation is usually positive for a sector. Michelle, I know we are running out of time that you asked us to end this at 3:50. Could I ask you a last question?
For sure, in a very
And
quick manner if possible.
yeah, so the last question is for those traders that are on the 97% that fail and that usually quit the market, what would you say to them to try to improve based on your experience in exchange now and from your past experience? What would you say to them so that they could try and make this a professional career?
Sure. I think that again, deep down, I will give them two recommendations. The first is like deep down more on fundamental analysis, and fundamental analysis is not only about the status of the market; it's also about knowing the agents of the market. If I take three people from my audience at the moment, unfortunately, I cannot do it. But if I take three people from the audience and I tell them, please name me three agents in the crypto market and tell me how they work, what are their strategies, what are their counterparties, and how do they connect with the rest of the ecosystem, probably they wouldn't reply to me. The majority of people that I ask this question, they say, exchange, exchange, exchange. I said, no, there are many agents in the ecosystem, many agents that take part of this huge ecosystem in which every one of them has a strategy, every one of them has a way to correlate with another agent, every one of them has a way to affect a counterparty, every one of them has an effect on a price in a certain way, on a price on the other asset in a certain way. And understanding how the ecosystem work is part of that fundamental analysis. So I do encourage people that are hearing me at the moment is try to understand more of how the ecosystem works. Okay, if you already know how to do on-chain analysis, if you do already know how to do technical analysis, and I hope you do by this moment, go deeper. How does a market maker works? What is a market maker? How does a B2B loan company work? What is their strategy? Who do they work with? How does a custodian work? Who are they? Which are the biggest custodians are there? How do they how do they correlate? How do they work with exchanges and with other institutional clients? Those are the type of questions. It's creating a net, right? A network. How every point connects with every point. That's going to be giving so much edge to the retail traders at the moment. And I think that my second recommendation, and again, this is purely a genuine recommendation, I did have a webinar and a one-on-one with Adrian a few weeks ago, and I was truly shocked by the cleanness of his analysis. So I do recommend that anyone that hasn't joined the Beard Nest to do it, because I was absolutely shocked by the cleanness of his technical analysis. And if there is anyone that hasn't mastered technical analysis yet, I do recommend to go to Beard Nest and see the quality of analysis that Adrian is making. Of course, Adrian and his team, but I was extremely pleased to have this 45 minutes with him in which I learned his techniques in the market, I would say. And that's exactly how every trader should be analyzing the market from a technical perspective. That's it.
Perfect. That's a perfect way to end. Thank you so much, Michelle, for your time today. Razor, do you want to say a final comment? Thank you.
Thank you, Michelle. Great value there.
Good. If there is any question, I'm on Twitter as Michaela Silvestri without the I, so Michaela Silvester. Again, many thanks for everyone. Many thanks, Adrian, for inviting me, and I hope that this was a very good approach for everyone here. And
it was awesome. Thank you. Please, everyone, go follow Michelle on Twitter and on the other socials. Thank you. Thank you very much.
Bye-bye.
Have a good day.